Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of December 25th through December 29th, where we'll see if Santa Claus came early to the markets this week, and we'll plan for our holiday trading week, December 25th through December 29th. So let's get started. Thank you for joining us, Brian Moritz, and happy holidays to you. Hope you all are doing well. So here's our Google document with our notes for part one of our weekly trading game plan for December 25th through December 29th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes contain links to bonus video, to the tools or resources we use to do our market analysis, derive our strategies and trade ideas for this trading week. We keep all of our notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes from this week as well as notes from previous weeks. And you can find direct links to this Google Drive folder as well as this Google document in the description box below. Welcome, MD. Thank you for joining us. Hope you're doing well. So we'll start out looking in FinViz, see how the markets ended up on Friday. So we can see all the indices were relatively flat, just kind of choppy. It's not surprising. Both the end of this week and going into next week, we'll talk about trading holiday weeks. A lot of people probably left, at noon or all day on Friday or traveling. So we expect lighter volume, a little bit of choppiness, but the NASDAQ and S&P did eke out a small gain. We'll talk about this 230 in my humble opinion, algo switch-ons that we've seen this week. We see that little dip right around 230 on all the indices. And again, I'll speculate what I think those 230 volume spikes are. We see we had 64% gainers, 31% decliners, almost 88% new highs, 12% new lows. We've got over 81% above their 50-day moving average, only 18% below, and 68% above their 200-day moving average, and only 32% below. So although this chart's showing a little bit bearish, you can see under the covers, it's really very, very bullish. We've got, the majority of the stocks are now above their 50-day and 200-day moving averages. Welcome to Ricky Khan, Easy Mike. Thank you all for joining us as well. Hope you all are doing well. So we saw, again, a little bit of a rotation out of the Magnificent Seven, out of the mega cap techs, except for maybe Microsoft and Google did pretty well. We saw that weakness in Nike on their poor guidance going forwards, but otherwise the majority is pretty green. Again, in my humble opinion, a rotation. Friday was a rotation out of the Mag 7 into some of the broader stocks. And again, we'll talk about these sector rotations and how we can make money trading those sector rotations. See the major decline in Nike. See some of the news, so increased instability regarding the Israeli-Gaza conflict, and that seems to be potentially broadening. We talked about a number of shipping companies have stopped shipping through the Strait of Hormuz, through the Suez Canal. They're now going around Africa. We talked about this last week, an increase in shipping costs, potentially supply chain disruptions, which is actually already occurring, and potential increase in inflation due to those increased shipping costs. We're talking about 2024 being media deal making. Stocks close higher, registered longest weekly win streak since 2017. So again, some potential evidence that Santa Claus came early to the markets this year. Rally time for the markets. Again, we'll talk about now we're in this period of what they call the Santa Claus rally and what that means. Saw oil tested 75. It's bouncing, testing that 75 level, bouncing between 70 and 75. So we'll see that in the futures. Natural gas tested 250. Again, it's trending up. Gold made a move to move upward. We'll see that as well. See the futures, the Dow down a little bit, S&P and NASDAQ up a little bit. Saw the dollar weaken some, so the DXY is hovering around 101. So we saw the euro strengthen a little bit. USD to Japanese yen declined a bit, and the British pound also gained some against the yen. Treasury yields have been kind of rebalancing right below 4%. So we've seen slight declines in yields and then a bounce back in yields. So again, kind of hovering right below that 4% level. So we look at the groups and the sectors and the industries for this week. Easy Mike is pointing out some helpful outflows, ETF outflows, and again, we'll be looking at our ETFs in a little bit. There's inflows, Move, SPY, TLT, BND, which I assume is a bond, outflows, USGU, BB, EEM, LQD, and TQQQ. Yeah, we'll see that outflow when we get to Webull. We'll see that outflow out of the NASDAQ again. So in terms of groups or sectors for Friday, we see it's a bit of a risk off, a move to defensive names, so healthcare, defensive, basic materials, utilities, some real estate, energy again is rebounding, and we see the weakest were consumer, cyclical, and technology. For the week, communication services was generally strong. Again, basic materials and energy have been strong. Healthcare, industrials. Again, weakest is technology. And again, Friday looked like a rotation into utilities. So utilities was weak, and then they rotated into utilities on Friday. For the month, real estate's been rebounding, been relatively strong. Basic materials rebounding relatively strong, and again, energy is starting to make a rotation back up. For the quarter, energy was the weakest, so again, we're seeing a rotation back into energy. Basic materials, technology was strong for the quarter. We'll talk about potential rotation out of technology for next year. And we'll look more in detail probably next week about the half year and the annual performance, as we expect a rotation from the laggards to leaders. That's kind of a historical trend we'll take a look at probably next week. But we could see utilities, consumer defensives, and utilities, consumer defensives were the weakest for the year. So again, we'll talk next week, probably more detail about how we expect a sector rotation from the laggards to become the leaders in a number of areas next week. So look at some industries. So from Friday, again, shipping was strong. Again, we talked about increased shipping rates, energy, coal, aluminum recovered. It's been rotating. Copper recovered a bit. Again, oil, natural gas, gold rebounding, some real estate. So the weakest, apparel, footwear. So that's the Nike. Got office REITs, mortgage-backed REITs. Silver showing a little negative, although it's again trending upward. For the week, again, aluminum and coal rebounded. Shipping, steel bounced back. See again, the weakest footwears, farm products, office REITs, some retail REITs. So for the month, again, aluminum recovered. Solar's been rotating in and out. REITs in general did quite well for the month. Gold did well. Gold and silver have been doing well. We'll see in the futures. I think there's still more opportunity in silver to rebound. Uranium's been generally very strong, down a little bit for the month, but we'll see, for the longer term, uranium's been very strong for the half year, coal, etc., energy, etc. So we'll look at the economic data from last week. I'll bring up the calendar in investing.com, go over some highlights that I noted for the week, and then we'll see what other economic data is coming up in this holiday shortened week coming up. Let me grab a drink and we'll take a look at that. Okay, I didn't have any notes for Monday through Wednesday, but we'll look at the investing.com calendar in a few minutes. Thursday, we got jobless data and GDP, which was important data. We see continuing claims a little bit below expectations. We also got core PCE prices, which was below expectations. So again, these PCE prices also below expectations. So the inflation indicators that the Fed uses, again, below expectations. We see inflation on the front end, slowly coming down, which is all positive for inflation eventually reaching their target. So the risk of Fed rate hikes is a little bit lower. Also, the risk of a real recession. We got GDP data. It was positive, a little below expectations. So the economy's slowing, but not in any kind of recession. GDP's positive. So, we're not likely to see a recession anytime soon. Initial jobless claims a little bit below expectations. So again, the Fed doesn't have to worry about spiking unemployment. Continuing claims a little bit below previous. So again, some people are finding jobs. So again, the job market continues to be resilient. So not a risk of high unemployment. So again, the Fed can be data dependent. They can hold. No risk of a hike. And again, they're pricing in, cuts, I think, in my humble opinion, a little bit too soon. Some of the Fed officials are coming out and they're saying, we're not going to cut until, second half of 24, late in 24. So, and I believe the market's still pricing in cuts before that. So that's a potential for some mispricing in the market. Thought this was interesting is real consumer spending actually was below expectations. So the consumer spending is slowly slowing down. Friday, we got some building data. Building permits was above expectations, but down month on month. So it's, slowing. Durable goods was positive. Core PCE prices was below expectations. So again, inflationary indicators are slowly coming down. Durable good orders was good. Again, PCE price index dropping. Personal income stable. Then we got the Michigan sentiment. I thought that was interesting as well. Is their 1-year inflation is stable at 3.1. 5-year though went up a little bit to 2.9. Their consumer expectations went up a little bit. Sentiment went up a little bit, but current conditions was a little below expectations. New home sales a little bit weaker than expected, but again, this was November, probably before we got the big treasury yield drop and therefore mortgage rate drops, and new home sales, so again, decreased for November. So one of the news items that I caught based on this data was U.S. inflation is down for the first time since 2020, based on the Fed favored PCE index. So again, inflation is now coming down, so that's positive for the Fed having success reaching their 2% price or inflation target eventually. Also Friday, and we'll talk more about the Santa Claus rally, historically, what time period that is, and we'll look if we got Santa coming early to the markets this year, but Friday was the first day of the historical Santa Claus rally. Just a quick reminder, if anyone is not aware, the markets are closed on Monday for Christmas, so we wish you all a very Merry Christmas, and we will enjoy that day with our family, friends, etc., and encourage you to do likewise. So welcome Walter Lyons, Ricky Kahn, Sydney Osborne. Thank you all for joining us. Flip of the Shippa. We'll look and see if I missed any other economic data from last week. Got a couple bond auctions. They look like they're pretty much in line. Got Fed officials talking. Again, they're trying to kind of walk back this concept of rate cuts. So, they're saying it won't be till late in 2024. Market's still pricing them in earlier. See, mortgage rates came down a little bit. Again, bond yields have come down. Consumer confidence, better than expected. Existing home sales a little bit better. Crude oil inventories were up significantly more than expected. It was expected to be down. It was up, although, again, the oil prices with the disruptions in the Middle East are trending back up. We talked about jobless data, GDP data. Bill auctions, bond auctions look, again, pretty much in line. Fed's balance sheet coming down, so they're still doing quantitative tightening, still letting things roll off their balance sheet. So that's still some tightening in the financial conditions. Talked about durable goods and PCE and Michigan sentiment. Baker Hughes. So again, we saw the oil rig count drop. So even though the oil rig count is dropping, I heard the U.S. is producing record amounts. So very productive. They're decreasing the oil rig count, holding the price of oil up. Also, you heard relative to oil that Angola has left OPEC, so they don't have to adhere to their quota for cuts. Also, I saw Russia is curtailing or cutting their exports, so there's a number of factors holding the price of oil up. So if we look at the economic calendar for next week, again, markets closed on Monday for Christmas. Get some housing data on Tuesday. Expected to be pretty light. Again, holiday week. Again, get some Fed officials talking. Normal crude oil. We get jobless data on Thursday, so that'll be somewhat important. Retail inventories. Typical natural gas and crude. See what we've got for earnings. So here's that steel company that we were watching. Obviously, it's popped up. You'll see we're taking that off our list as steel's recovered. MSB's popped up already, but they report earnings might get a dip if they're miss earnings. Get some biotech, some gold. Not a whole lot, so it's pretty light on the earnings. Get some pharmaceuticals, etc. So pretty light earnings calendar. So again, not a whole lot of volatility. Again, we expect low volume. It will cause some choppiness in the markets, being a holiday week. It's typically low volume, a little choppiness, etc. Okay, again, I've got all the FOMC meetings in our notes. Next one's not till the end of January. So again, we're not going to get any further commentary about actual Fed hikes, cuts, etc. till the end of January. Although again, Fed officials will be coming out talking, and And I expect them to continue to kind of walk back that idea of cuts anytime soon. Still the higher for longer narrative will continue. Again, none of this is financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. So now let me grab a quick drink and we'll look at the market screen in Webull as well. Just a quick reminder, if you're not already using Webull, you can still get up to 75 free fractional shares of stock by opening an account and funding it with at least 25K. If you're under 25K, you can get 30 free fractional shares of stock, each worth $3,000 to $3,000. And they're still offering their 5% interest on uninvested cash in a cash account. So it's actually better than, treasury bonds now. Treasury bonds are down in the 4%, and Webull's offering 5% cash on your uninvested cash in your cash account. So if you're not already using Webull, you can see we use it for our market analysis, our due diligence, the majority of our trading. And if you'd use our affiliate link in the description box below, you also help support our BeachBum trading community, which we greatly appreciate. So I'm using the online browser version of Webull, which they've been making some enhancements to. This is the market screen on the online browser version of Webull. We see in the histogram of advancers and decliners, we had, significant about 2-to-1 advancers to decliners on Friday, but the percentage of advancement was very small, decliners very small. So again, not a whole lot of, momentum in either direction. As Easy Mike pointed out, we saw outflow out of the NASDAQ as typical we've seen for several weeks on Friday. So it's, starts out pretty flat, and then we get an outflow out of the NASDAQ, inflow early into NYSE. Again, you can see the near-term earnings calendar here in the calendar section in Webull, also dividend payment information, splits, etc. We'll look at the best performing industries for the week. So again, now they've got them sorted by percent gain. So finance was the most positive, got some education, some paper products, business, metals and mining did well, IT and coal. Biotech's kind of split, oil and gas positive, oil and gas, some pharmaceutical, utilities. Again, we saw that bounce back in utilities, solar. Look at the ETFs. So we've got some foreign currency up on the Russell, up on small cap Russell. Short the Dow, dogs of the Dow. So they're already starting to, front run that January effect, looking at the dogs of the Dow. We'll probably talk about that. Up on the NASDAQ. So even though there was that outflow out of the NASDAQ, we've got some positivity in the ETFs there. Up on the Russell, up on small caps. Short the VIX, as we'll see, even though got a little bit of a swing back up in the VIX, it's still very low, below 14. I think it broke over 14 at one point. Industry, industrials, healthcare, financials, the only real negative, communication services, so real estate and consumer cyclical, a little bit of technology. See, 3D printing was positive. Commodities, Crane shares, so that's a China, I believe. A couple Chinas. Sustainability. Bond, as Easy Mike pointed out, BND. 1 to 3 year bonds. Okay, we'll look at the futures as well in FinBiz. So this is, I want to look at a couple. Actually, I want to look at the indices first, then we'll look at the futures. I kind of skipped over the indices, so let's look at SPY. This reminds me of that choppiness. So if I zoom this in a little bit, I want to see those 230 choppiness. We can see, though, kind of it's topping behavior, consolidation, chopping around the top. That's not what I wanted. I want daily, and then I want to go, I guess that's as close as I can get. So maybe we'll look at that in the futures. So again, we see it, hovering along the top, testing the new top. So generally positive. We've had that big run, since October, end of October. So very bullish. And again, now we're in the Santa Claus rally time frame. So I expect, to continue to test, make new highs, chop around in that upper range of the highs. So Qs, very similar. See if we go to the daily, see it, consolidating, chopping around the new highs. Again, very bullish since October. Again, Santa Claus rally. So all very positive for all the indices. Are all very similar. Part of this choppiness, in my humble opinion, again, is I think it's some level of just sector rotation. They'll rotate into technology one day, and then into industrials the next day, and then back into technology the day after. And I think, in my humble opinion, again, I think that's a way to make money, particularly this week while we're in a holiday week, low volume. I think we'll just see that sector rotation kind of continue. So if you watch the sector rotation, again, take advantage of that. I think there's opportunities to make money while we're, consolidating, chopping along the top until we get a longer term trend again. IWM, very strong. And we'll talk about what's, the January effect and the effect on the Russell, the small caps. When we get into January, we'll talk about, again, tax loss selling, and again, the January effect when we get into January. But that should be another catalyst for the Russell. But again, sector rotation in and out of small caps into mega cap tech. Yeah, the futures on the mix rolled over, so we see that gap up, but then, downtrend back down. The actual VIX, I think, it just slightly broke above 14 and then down, retraced back below 14. We did see a little bit of a swing up from, the low 12s in the VIX. You can see that bottoming, it swung up a little bit. So I would expect that slow swing, but there isn't really any major catalyst other than the global instability that might cause if we get more. I hear Iran is talking, being more belligerent, and that could cause, a little bit of instability, some level of panic. But we'll see. So we'll go back to the futures. So again, all the futures showing that, topping action. My humble opinion, again, they all look like they're chopping along, testing the top, consolidating for a move, and we'll have to see if that move, is upward or downward. But again, we're in a Santa Claus rally period, so there's positive sentiment, positive momentum, and then we'll get into January. And January also we talked about was generally positive. February not so much. So we see the Nikkei, oscillating a little bit more. Europe again pretty topping. DAX pretty topping. Again, we see that decline in the VIX, and then a roll over into the future VIX. Again, oil bounced off 70, tested 75, consolidating a little bit. I expect that consolidation and retesting 75, but then, break higher to go test 80. Natural gas, again, trending upward, positive, engulfing candles, but not some, it's been volatile from day to day, but, not a strong move yet. Gold, again, positive trend. It, bounced back up pretty dramatically off that 2000 level. Now it's trending back up, testing that 2050 level. Again, trend up. I expect it to eventually go and retest that previous high. Same thing with silver. Similarly, bounced off 23 pretty dramatically. Got support at 24. Now it's testing 25. Again, we just need another push. And again, I expect it to eventually go and test that recent high. Eventually, copper trending back up. Palladium had that huge run, and now it's consolidating. We'll see if it continues trending up or if it needs to retrace some. That's a pretty dramatic move. Corn down a little bit. Sugar had a dramatic drop, but that cane ETF still not very attractive risk reward. I keep looking at that, but still not at a bottom where that cane ETF would be attractive. Wheat, we rode that nice run up. Now it's kind of consolidating, retracing. We'll see if it rolls over further and retraces, or if it trends. It looks like it might, continue to trend back up. And again, the bonds, they'd had that, steady run up, and now again, it looks like they're, consolidating, testing, rebalancing around that 4% yield level. We got that drop in the dollar, so dollar's down to 101 or so. It's been, steadily dropping recently, so strengthening the foreign currencies in general. Okay, we'll look at our ETF Google Sheet a second and then talk about our strategies for this week. So if anyone in the chat has particular ETFs you want to look at in our ETF Google Sheet, you can throw those up in the chat. Try to cover a couple that we've already talked about. Just a quick reminder, you can get 24/7 access to our ETF Google Sheet, as well as our dividend payers and our puts ROIC Google Sheets by joining our Patreon at the all access or VIP level. As you see, when we identify a potential opportunity, something that's overly extended to the upside or downside, we want to identify an ETF to play that theme long or short. That's what we use our ETF Google Sheet for. And you can see how we use that ETF Google Sheet for our trading, for our strategies, and a number of other videos on thematic ETFs in our ETFs playlist on our BeachBum Trading YouTube channel. Let's check in the chat, see if anybody's got a particular one you want to look at. We'll talk tomorrow. We see, SARK is down. We saw, strong runs in all the technology sectors. So I'll bring up the technology component screeners. Again, on our screeners tab, we have a number of screeners, one of which is our technology components, so we can see the trends in some of the subsectors of technology. And we see they've all had, a very exuberant run up. We see ARC, made a new 52-week high, seems to be topping out. Similarly, Fang Yu, semiconductors, again, has slight retracement, but again, exuberant run. It looks like it's, topping out. Biotech, not so much. It looks like it's, testing that upper trend line. It bounced down off of that a couple times, so it's oscillating between its moving average and that trend line. But again, a pretty exuberant run. It does have more room to go. TQQQ, again, new top, looks like it's kind of topping and rolling over. And then TECL is the broad ETF on technology. Again, looks like it's topping, potentially rolling over. And I expect, this week probably further chop in this area. And then again, we'll talk about potential sector rotations regarding the January effect and the laggards to leaders concepts, probably more so next week. So now, I expect, choppiness this week, not a big swing opportunity in those technology components. You can trade the momentum of the day, make some money that way. But we'll see that in all the technology sectors. So ARC, SARC's down, LabU, LabD's down. We had some run up in Bitcoin and some of the cryptocurrencies relative to waiting for an ETF approval. So they've been trending up. Brazil's been strong. Cannabis, MJ, we're keeping an eye on that to see if it becomes attractive going forward, but that probably more so later in the year. China had some, further restrictions on gaming that drove China down. So ETF to play China down is Yang, play China up is Yen. It's been pretty volatile. I know some of our fellow BeachBum traders make good money on, we say, is it a yen day or a yang day? And in any given day, there's opportunities there. Coal's been strong. So ETFs, dry bulk shipping obviously is going up because of the restrictions on the Straits of Hormuz, Suez Canal, so shipping prices going up. I've been keeping an eye on these Europe and ETFs to see, if this gets to a top, we might look at shorting if the risk-reward profile is attractive. FANGs, we talked about FANGs. DBA, we talked about gold. If you wanted to, trade gold, trade the momentum in gold. GDXU is gold up. GDXD, gold short. So we saw that rejection when it hit that previous all-time high. So if it retests, we see some opportunity with shorting gold with GDXD. The miners, the one we prefer is JNUG, has a better risk reward. Someone else mentioned GDXJ, which we do have in our research tab. So you can see the risk reward profile for GDXJ and compare that to JNUG. And you'll see, in our humble opinion, the risk reward profile for JNUG is better than for JDXJ. So that's the one we have in our main ETF Google Sheets. Yeah, Easy Mike's talking about several individual stocks related to Bitcoin mining. Yeah, we currently own the Block ETF, and we've added, several recently to trade both Bitcoin and cryptocurrency. So you can see some of these other. We've got BITX, which is a 2X version. So you can look at various other ways. BITO is a long, Bitcoin, BITI is short. Also, again, we have Block for cryptocurrency, and there's also BITQ. So a number of ways with ETFs. Again, you get broader exposure. not directly on Bitcoin. Talked about gold. Keeping an eye on Japan. See if it makes a new all-time high. See if there's an attractive short. Talked about TQQQ and SQQQ. Trade the NASDAQ. We talked about natural gas. So you can long natural gas with oil, short with cold, or long with UNG or UNL. Oil, talked about that. You can long with Gush. So again, oil's trending back up. So if you want to ride that trend up, you use Gush or UCO. Shorting oil drip. So if we get a correction, a bounce off of that 75, or roll over later, you can short with drip or SCO. We are currently long USOI, which is a monthly dividend payer on oil. So again, we're long. We caught that, around that 70 dip, and we'll ride that until it rolls over, and then again buy it back cheaper. Saw that run in palladium. So PAL's the only one. I don't have a short on palladium. Several people have been Easy Mike. Others have been talking about potash and agricultural inputs. So these are individual stocks we watch for potash, IPI, and MOS, Mosaic. So you can take a look at those. Watching real estate. Real estate's been trending up. Retail had a pretty good run. And all the only short we have is kind of a mixture of longing online, shorting brick and mortar. So EMTY we talked about a couple weeks ago. So again, Nike had some bad news. We'll be listening to that and looking at that probably more in detail towards January. S&P. Talked about silver. So if you want to play long silver, AGQ. Short silver, ZSL, silver miners, SILJ, or monthly dividend payer. We still have our position in SOVO, monthly dividend payer on silver. Easy Mike's talking about DBA, which is agricultural. So again, it's in a couple categories. So DBA, we've got it feeder cattle. So you can see the current risk reward on DBA. It's both under feeder cattle, and I guess that's the only category I've got it in. Talked about silver, S&P semiconductors. Again, we looked at that. SOXL's pretty high. Talked about silver, small caps. If you want to long small caps, TNA, short with TZA. And then we talked about TECL, long, broad technology. We're currently short that using TECS. We talked about bonds, so you bonds long, TLT, TMF, short with TBT, or we've got other categories as well for shorter term bonds. Uranium, we talked about uranium's been strong. Utilities, keeping an eye on that. Wheat, see if wheat comes back down. And then also keeping an eye on the yen, see if that happens to present an opportunity to swing up again. Just checking the chat, see if anybody else had another ETF you wanted to talk about. Again, if I missed your ticker, missed your topic, please throw it back up in the chat. We can come back and take a look at that as well. Yep, corn's still down. We do have an ETF for corn. We're watching that with wheat. So you can find the ETF for corn. Again, not terribly attractive right now, but its 52-week risk reward isn't all that attractive. So keep an eye on that. There's copper. Okay, let me grab a quick drink. And again, we'll talk about our strategies, our theme for the week, about did Santa Claus come early to the markets this year, talk about how can we take advantage of potential opportunities given that theme. So again, our theme for this week, our question is, did Santa Claus come early to the markets this year? In my humble opinion, the behavior that we saw early in the week was, an early Santa Claus rally. Typically, historically, the Santa Claus rally is the time frame of the final 5 trading days of the year and the first 2 trading days of the following year. And I put a reference to that article in Investopedia, so you can read that article. We've also got more information about the Santa Claus rally in our video, The Santa Claus Rally Is It Real? And you can access that via the link in the notes or also on our YouTube channel. And then we talk about, what does it mean if we have a year without a Santa Claus rally? So that means that the historical Santa Claus rally is started on Friday, the 22nd, and runs through. Actually, that's probably should be January 3rd. So let me bring up my trading calendar. So the first 2 trading days of 24 is going to be the 2nd and 3rd. So the 3rd would be the last day of the Santa Claus rally. Historically, again, I think Monday, Tuesday, that behavior that we saw, it was very bullish, very exuberant, and I think we got Santa Claus came early to the markets this year. Then we saw that 2:30 on Wednesday and Friday. We saw those strong down candlesticks. So if I zoom into the S&P futures, actually I'm going to go into Webull and look at the stock screen. Look at the chart for the S&P SPY. So Wednesday and Friday. See at 2:30, right at 2:30. In my humble opinion, I think they flipped the algos on. You see, it was very overbought. S&P, Nasdaq, etc., hitting highs, and then right at 2:30, we got that spike down, and then on at 2:30 on Thursday, we got a little bit of a push up, and then at 2:30 on Friday, again, we saw a little bit of a push down. Again, I think somebody threw the switch on the algos and said, okay, we're going to sell, try to scare some people out, try to get some of the Magnificent Seven cheap. It worked pretty good on Wednesday, not so much on Friday. And then again on Thursday, they flipped it back the other way. Again, my opinion, not financial advice, but I would watch out for that during this week again. They might even change the time. Maybe it won't be 2:30. But I think it made people a little bit hesitant on Thursday as well to buy the rally that they flipped on. And then, on Friday, they flipped it again, and we didn't get the level of fear that we got on Wednesday, but you got a little bit of a dip. And again, I wouldn't be surprised to see that occur through the rest of this year, especially since we have, Santa Claus. Everybody knows Santa Claus rallies on, and that will have a tendency to push the markets up through the end of the year. So if they can flip it and get some fear, catch some Magnificent Seven cheap, I think they would be happy to do so. Part of that is what's called end of year window dressing. So your money managers, your hedge fund managers, they want to show the winners on their books come the end of the year. So they want the Magnificent Seven on their books at the end of the year. Then again, we'll talk about the January effect. And in my humble opinion, I think they'll turn around and take their profits after the end of the year. It's another aspect of they don't want to take their profits this year because they'll have to pay tax on it this year. If they wait till next year, then they can defer the tax on those gains till next year. So again, I expect rotation into the Magnificent Seven towards the end of the year, and then early next year rotation out. And then again, we'll talk about what are they going to put their money into if they rotate out of the big winners from this year, and what are they going to put it into coming next year. Along those lines of the Santa Claus rally, the exuberance, I added a link to the AAII Investor Sentiment Survey. I added this in the reference link on our homepage as well, and we'll take a quick look at that. So on our homepage in the link section, you can find links to our social media, etc. Our homepage is beachbumtrading.com. And under the reference links, we've added a link to that. We have links to various tools, etc. So we added a link to the Investor Sentiment Survey. And you can see this is a weekly survey they do of members. So these are individual investors, people, traders like you and I, who say, how bullish or bearish are you on a weekly basis? And you can see for the week ending 12/20, it's a record bullishness for this year. So 52.9% are bullish. So as I always say, following Warren Buffett, be fearful when others are greedy and be greedy when others are fearful. And right now we have a lot of greed, a lot of positive sentiment. So again, watch out for, potential, try to scare people out of the market. It is very overbought, very extreme greed. But again, I think they'll take those opportunities, buy the dip, particularly in those Magnificent Seven. So let me know what do you all think? Do you agree, disagree with those concepts, those hypotheses? And let us know in the comments below, in our Discord, in the chat, etc. Let us know what you think. Finally, we have a video on trading during holiday weeks. So it talks about, low volatility, possible choppiness, etc. So you can access that video about trading during holiday weeks, that short video, via the link in our notes as well. Brian Merritt says he agrees, so that's good. Flippo, yes, those pullbacks, if they do, again, flip that switch, be it at 2:30 or at another time during the day, those are potential opportunities. So we've also been talking, all month about how to make money trading in December. So we've got the links to those, how markets perform in December, best performing sectors and industries. We've been talking about tax loss harvesting. Again, I think the majority of the tax loss harvesting has occurred. But again, this is the last week of the year. So anybody that wants to take a last minute tax loss sale, they'll be looking to do that. So any of the big losers from this year may still be vulnerable. But again, the volume's going to tend to be light. Most people are probably already out of the market. They've already probably taken their tax loss. But again, big losers or, somebody that became a big loser the past week or so might be vulnerable to tax loss harvesting. Again, we've got some references to what is tax loss harvesting, wash sale. Again, if you are taking a tax loss sale this week, just be aware of the wash sale rule, how that works, when you can buy it back if you choose to do so. So again, we've got links to those. If you need further advice, we recommend Mark J. Kohler. We use them for our tax and business advice. So you can find our link to Mark J. Kohler in the notes and also on our homepage. So we've also released a couple short videos on how to make money trading in the winter. So December, January, February, winter months, we've got, you can listen to those short videos on the seasonal trend going into the months of the winter. And then I put these videos in here for January because, again, we'll start talking about what is the January effect, what is the January barometer, what does that mean, and then how do stocks typically perform in January. So you can access those as well now via the bonus links in our notes, and then we'll be releasing those, obviously, once we get into January. Stock Market Jobber, Mark, thank you for joining us. Glad to see you. Again, thank you for joining us. Hope you're doing well. So tomorrow, again, we'll be using all of this information to select our top swing trading stocks to watch. We'll also look at our dividend payers. We'll talk about option strategies that we use to also generate income while we wait for our swing trading, top swing trading stocks to set up appropriately. So again, we'll use all this to select our individual stocks tomorrow. Had a question, a recommendation also by Easy Mike, so I wanted to cover that quickly. He referred us to the following resource for Forex traders. It's called the Forex Factory. So we added this link under the reference links category of our homepage. So again, our homepage is beachbumtrading.com, bum without the U. I'll put that up in the banner as well. And we can take a look at that just very briefly, and maybe Easy Mike can add some commentary about how he uses the various tools on this Forex Factory site for Forex trading, as well as economic data. You can see it also has some information about various foreign economic data and what foreign currency that may impact. So again, I've also put a link to that in our Discord in the Forex channel. Our Discord's free to join. You can find a direct link to our Discord also in the description box below. We have, channels for different styles of trading, different asset classes, etc. So if you're a Forex trader, you can discuss Forex trading. And again, hopefully Easy Mike will give us more information about how you can use this Forex Factory site to help you with your Forex trading. Welcome, Born to Be Free. Thank you for joining us. Just wrapping up. So again, thank you again to Easy Mike for sharing this Forex resource. And again, I'd love to hear more about the benefits and features and how you use this for either Forex trading or also for trading, the various ETFs. We have a number of ETFs where you can trade the ETF for the foreign currency, like, we have Euro ETFs, we have Yen ETFs, so you can also use those ETFs to trade foreign currencies if you're not directly trading on a Forex exchange as well. So hopefully this site will also help you, trade those foreign currencies also using those ETFs. So let me wrap up for this week. Again, we'd love to get your feedback. We'd love to hear your comments in the comments here in our Discord. We hope that you like this content. We hope that you'll hit the thumbs up button, share it with your fellow traders and friends. Let's continue to build our BeachBum trading community for the mutual benefit of all of our BeachBum traders. And again, please let us know what can we do to improve our weekly trading game plan videos, any of our videos, our tools, Google Sheets, our content, our community, etc. Please let us know what we can do to improve. Again, we'll be starting to put together some resolutions for next year. So some goals for improvement. We'd love your help with that. And in the meantime, anyone who we don't see tomorrow in part 2, we want to wish you a Merry Christmas from the BeachBum Trading family, including the BeachBum cat. So we hope you all will come back tomorrow, same bat time, same bat channel, 10 a.m. Eastern Time for part 2 of our weekly trading game plan for December 25th through December 29th. And again, we'll be using all this information, all of our trading strategies, trade ideas to select our top swing trading stocks to watch, stocks in our bullpen, how we want to position our shopping list, and additional trading strategies and trading ideas for the week of December 25th through December 29th. So again, we hope to see you all again tomorrow, and have a great Saturday. Thank you all for joining and watching. We appreciate all your support, and have a great day.